So what is that telling us? It's telling us that they're taking profits on longs. Why would they do that if they're planning on taking price even higher? Okay, so let's be aware of that. How's it going, fellow traders? Magic Trader here, and this is your CFTC report for the data that was reported on April 25th, 2023. Here's a brief snapshot of the positions held by the institutions as of that date, and so let's start by examining gold. What do we have here in gold? Well, ladies and gentlemen, welcome back, first of all. It's been a hectic few weeks with some moves to the upside, downside, upside, downside. Nothing sustainable, nothing significant, but we will review it today, okay? Today we got the interest rate announcement coming out, and it's likely that it's going to be increasing a quarter point. At least that's what the word is on the street. So let's see what's happening with the positions leading up to this announcement, because maybe we can get a little bit of an edge in our forecast or in our trading this week. Okay, first I will point out the closure of some long positions that the banks were holding. Okay, we had 266. They started reducing them down to 260, and then 260, and then 253. So a reduction in long positions from 266 to a 253,000. Okay, so what is that telling us? It's telling us that they're taking profits on longs. Why would they do that if they're planning on taking price even higher? Okay, so let's be aware of that. They're taking profits on longs, and as we were mentioning last week, they were doing the same thing with the euro. Okay, they had to because they are so overly leveraged with their long positions that they have to take profits. The only way to make a profit is to close positions after the increase in your profits. They opened up positions lower on the chart, price rallied, they have their profits, they have to close them. It's as simple as that. So this is where we're at right now, okay? So they're profit taking. This is the last thing the banks were doing. They were profit taking on their long positions. And what are retail traders right now? This is Wednesday, okay, the 3rd of May, and as of right now, retail traders are 72% short, okay? They're 72% short. And one of the things that we know about retail traders is that if they're very aggressively short, which means they've acquired those positions from lower as price continues up the chart, that's how they become aggressively short. When they're super aggressively short, what tends to happen is price tends to drop, okay? It doesn't drop as they're accumulating those shorts. It only drops when they're super aggressively short, all right? So I think we may be coming to that point very soon. If not, maybe we're already there. All right, let's take a look at oil. Oil rallied up, gapped up, and it's been pulling back ever since. We're not seeing much signs of anything. Just over the last few weeks, the banks have gone from 309 to 322, now 323. But still, the coloration of the cells tell us that they're not really focused on a long position with oil right now. Doesn't seem like they're really focused in either direction when it comes to oil. So we'll move along. We'll take a look at the US dollar. So remember, US dollar is pretty much the opposite of the euro. And right now we see the euro they're quite aggressive with short positions, which means retail traders are quite aggressive with long positions. Okay, but remember, when they're acquiring those longs, price will typically drop. When they're super aggressive with those longs, meaning they can't take them anymore, they'll probably switch those longs to short positions, and then that's when price will start heading higher. So there's a slight bias that we're going to see price head higher. Now, if we look at the positions, there's not much going on here. They've been reducing their longs from 26,000 down to 24,000. Both coloration of the cells for longs and shorts are blue, which means there is no strong direction according to their positions. So we'll move along. Aussie, what do we see? Aggressively accumulating short positions, and look what happened. Price declined from this area. This is the candle that represents this data here. That's why we got that decline. Now remember, we're just above institutional demand, so we could see price rally after contacting that area. So we got to be on watch for that. Shorts are aggressive, but all-time max is 117. We're getting close to that. What does that mean? When they reach all-time max positions or close to, we tend to see them close those positions, and that will typically mean rallies will form. Okay. As of right now, the retail traders are about 42% short and 58% long. So no strong bias in any direction when it comes to retail trader positions. Okay. Now the USCAD. Look, long positions have been the more aggressive. They were recently very aggressive with longs up until March. Okay, that takes us into this area here. And then they took profits on those long positions, which fueled a move to the downside. Look at shorts, very cooled off, although they have been accumulating them over the last few weeks. 16,000, 17,000, now 24,000. All right. So there are signs that they are accumulating them, but it's not anything significant at this point. If we look at the colorations here, we can see that the bias is bullish still. Okay, bullish, but be careful. Okay, bullish, but be careful. Now, if we look at retail positions, they are 89% short. What was I telling you about being maxed out on positions? If they're maxed out on shorts, that means they're probably going to switch those shorts for longs, which means we're probably going to see a drop in price begin to form. Okay, so let's be aware of that. US Swiss franc, not much going on. They increased their shorts from 5 to 10,000 right at this candle down here. We got a slight drop in price. Besides that, nothing else. Coloration of the cells starting to turn red. Look at that, starting to turn red. But it's just one cell of red, so it's nothing that we can be super excited about. All right. Retail traders are about 94% long right now. 94% long. So they were adding this long position as price has been declining. All right. 94% is pretty aggressive. Leads me to suspect that we could probably see them close off those positions, and then a rally begin to form as they get into short positions. Okay. So be aware of that. Euro US dollar. Here's the big one. So let's put things into context. We look at this information, we see that they slightly increased their longs from 242 to 243, but that came as this candle was being produced. So we still got somewhat a push to the upside into supply as they were doing that. Now I believe they are in the midst of profit taking from their long positions. Why do I think that? Well, you'd only have to take a look at maximum positions. Maximum positions that they've ever held is 266,000. Okay, look where we're at now. 243,000. That's not too far away from maximum positions. This is why I'm saying that they have to take some profits on long positions. And taking profits on long positions will fuel a move to the downside. Downside. All right. So our bias is to the downside. We have supply in play, and they need to take profits on long positions. This is a recipe for a drop. Okay. But then we look at the positions held by retail traders. They're at 78% short right now. 78% short, which means they've been accumulating a short position as price was moving upwards. All right. When they become very, very aggressively short, that's when they typically will say, okay, let me just take my losses. I'll switch my shorts to longs, and hopefully price will continue higher. And then that's when the banks will drop. Okay. Remember, if they're offloading their shorts for longs, they're helping to take the long positions off of the banks. Okay? That's what I'm seeing. And I'm just passing on what I am seeing with you guys. Okay, pound, look at pound increasing in longs, 54, then 53, now 59. A little bit aggressive with long positions. And as you can see, price did eventually rally a bit higher. But are we seeing anything very strong? Not really, okay? Look at shorts, look at longs, not much going on. Slight coloration on the bullish side for the sentiment. But besides that, there's not much else to see here, okay? Retail traders are about 70% short, so they're not aggressively short. Anything can really happen. Supply is still in play. We're seeing that there's chance that the euro is going to drop, so this will likely follow suit after the euro. So slight bias to the downside, I'd have to say. US dollar, Japanese yen, look at them increasing longs, and then you can see that price rallied. Okay, shorts, do you think they're focused on shorts? Look how cooled off short positions are. They're not focused on shorts at all. They are in a profit-taking phase. Okay, profit-taking phase. They reduced them, then they're increasing. Likely the next phase is to reduce again, which will put pressure to the downside. There was a nice short-term trade idea that I gave out last week, and it is playing out perfectly. There's a supply area here that price is dropping from. We got a nice trade signal to the downside on that one. So with that being said, we look at what retail traders are, and they're about 58% long. So they're about 50-50, okay? No strong indication of what is going to happen based on the sentiment of retail traders. But based on what we're seeing here, likely we're going to see a continued push to the downside, okay? And last but not least, we have the Kiwi. Longs are very cooled off, nothing taking place, and shorts have been reducing. Okay, distribution within the bearish cycle, which is written down here. Okay, and so price contacted this institutional buying area. We see a slight push to the upside. Coloration of the cells here is indicating that there is a slight bearishness. Okay, sentiment, but with demand in play, you know, longs are cooled off. This one is not that aggressive. Very difficult to determine what is likely going to happen next. Okay, what I can tell you is retail traders are about 68% short right now. 68% short. Okay, as price has been rallying these last couple weeks. So they're adding shorts from the lows all the way up to the highs. So we could see them offload those positions and then eventually price go a little bit higher. So that is it, ladies and gentlemen. That's what's going on based on the CFTC data. If you want to learn more about how we do our analysis, you can reach us at www.whiteoakfx.com. Hope you have a good rest of your week. Take care, be well, and we'll talk to you later. See you later.